Hello, everyone. Brian Coester here. Here to talk about Fannie Mae. I put this video together. I usually don't put videos together, but everyone keeps emailing me about this whole Fannie Mae announcement regarding trainees to inspect the property. It's something that, personally, that is certain. I don't want to say float under the radar, but it has at some level been not talked about as far as is how do you get turn time down? How do you get appraisal fees in line in certain areas in Colorado or in Washington State? And it's sort of been the one thing that's like this common sense change would make a big difference to the whole industry. And the thing is that because no one was really talking about it, I'm very glad that Fannie Mae came out and finally made the announcement. So what happened was is back in 2009, Fannie Mae changed its policies around trainees inspecting the property without the supervisor present. Most of the time, you'd have a situation where you'd have a supervisor appraiser who would then have maybe one or two trainees that work for them, and they would go and have the trainee go and inspect the property, and then the supervisor would sit and write these up, or the supervisor would maybe go with them, and it was a good working relationship. And so there was leverage, right? Because that's the key when you're talking about running a business. Is there's a leverage in time, right? You can send somebody else to go do something, and you can do something else, so you're doubling your productivity. When Fannie Mae changed that, now everyone became sole practitioners. Because why would I go and do the inspection with somebody if I can't be there? It'd be similar to like if a doctor, had to be there every time a nurse gave a shot or administered medication, right? So medication is important, just like the inspection is important, just like a shot's important to save people's lives. However, the doctor gives somebody else to do it, right? So you delegate it, even though the person could die from this, right? So it's super critical. Well, the inspection is important. Obviously, it's the one thing that the physical eyes on the property. However, you can take pictures, you can take videos, camera phones now enable a lot of stuff. And it's something where there's no reason that a trainee shouldn't go and do it. Well, Fannie Mae did update their policy. So 2009, Fannie Mae changed its policy. And then you had FHA, then you had all the investors change their policy as well. And then now, and FHA followed suit. And now, Fannie Mae maybe back in 2011 updated it and changed, trainees can now inspect the property. But nobody else updated their own policies. So FHA keeps still having it. All the investors still have it. Well, last year, this time, maybe not this time, last year, maybe not August, when things were really heating up and there was appraisals getting delayed, our turn times, nationwide were up 20, 30%. And, in areas like Colorado, maybe it was 50, 60%. Fees were up over 100% in certain markets. You just could not get a trainee, anybody, not necessarily a trainee, you could not get an inspection done. We had appraisers who in Colorado or Washington State say it's going to be $2,000 in 3 months for like a townhouse or a single family house. And you say, well, it's because of AMCs and it's because of that. Look, if you can hire somebody, supply and demand, if you can hire somebody for $1,000 or $2,000 to do a 1004 in that area, and there's nobody else that can do it, I don't care what anybody says, there's a shortage of appraisers in that market. Okay, trainees would significantly help from that. There's companies that currently have trainees. There's banks that allow trainees to inspect the property, and it's very helpful. So now what happened is none of the lenders wanted to buy it. Everyone was aware of back last year. Everyone was aware of the idea that trainees are possible with Fannie Mae. However, nobody wanted to bite on allowing trainees to inspect the property because all the investors still said no. And there's an issue of liquidity, right? So if I'm selling a loan, investor says no, you're the only pool, that even though Fannie Mae says, it's allowed, nobody else is saying it. And so what they were looking for is clarification. And that announcement was actually very intentional in the idea that, now with some clarification around it and putting out in the forefront again and saying, no, this is allowed and affirming it, hopefully now that'll trickle down to the investors, trickle down to what's most importantly, FHA, which would be huge, and then also at the state level. So the state level is where it gets muddy because obviously each state has its own requirements around trainees inspecting the properties without the supervisor present. Some of them say you got to do 1,000 hours. Some of them say you got to do it, for a certain amount of time, 3 months, 6 months. But regardless, this is a very positive change. I see this as a very positive change. And, it's one of those things where it's sort of going in the right direction. So there's an article yesterday about automated valuations models solving the appraisal problem. My personal opinion is that that could happen if the certain markets, right, like Colorado, Washington, Oregon, certain areas don't see appraisal fees go down or turn time come down, because ultimately it's just market, it's risk. So if you said, well, they say, well, Brian, somebody has to go out there and see the property. I get that, right? And that is true. But it's at risk of what? So essentially, if you have a $200,000 loan, if it's costing you $2,000 to inspect the property, to do the appraisal on the property, that's 1% of the transaction. And it's taking 30, 60, 90 days. So if you look at the cost of time, the opportunity cost of that 30, 60, 90 days, the warehouse line, the lender that now has to kind of hedge that on the secondary market, that is significant carrying costs, right? That they're not only doing with the appraisal, but with the underwriting and holding it in delay and locking the loan for an extended period of time and having to carry that operational risk. And so what's preventing them saying, look, no appraisal, 1% fee. They're putting 3% down anyway, right? So it's not like or 5% down or maybe 10% down. Most people are putting 20% down. So they inherently know that. And there's an AVM. So I'm not saying that that's going to happen. But, on a townhouse on an AVM for $200,000, if it's off by 5%, that risk is mitigated at some level, as opposed to waiting forever and not getting these deals done, because ultimately everyone wants to get the deal done. Now, do I think that's going to happen within the next 3 or 4 years? No. But it's something that could happen if ultimately the appraisal industry doesn't start really, and at the state level, at the FHA level, at the investor level, if the appraisal industry doesn't match up with what the mortgage industry is looking for, which is not, the mortgage companies want you guys and everyone to make money. The mortgage industry wants the appraisal industry to thrive, and I think they're very valuable. The issue has been interlocking the regulations like TRID, which prevented the fee increases without redisclosing, like some of the inspection requirements or some of the overlays that each investor has. That has really been the conflict with that, from what I've seen, because most of the lenders are more than willing to pay for getting things quickly, right? They need them, 5, 6, 7 days, but they can't do all the things that they need to do because some of the regulations and this should help. Regardless, I'm getting on a little rant here, but this is positive. So Fannie Mae clearing its policy is just one really good step. FHA needs to which, I actually put together a letter it's waiting on, it's going to be sent to nobody now because there's no FHA commissioner yet. But once Dr. Carson gets confirmed, that would be helpful. And then also, it would allow the appraisal community to sort of start getting new blood into the business and start really in areas like Washington, Maine, and Oregon, calm the nerves. Everyone's really nervous now about what to do. They cannot wait 30, 60, 90 days and pay $2,000, $3,000, right? They just can't, and they just won't, right? At a certain point, there has to be something, and I'm just hoping it does, things start moving in the right direction, because it'll be good for the industry, it'll be good for the appraisers, it'll be good for the mortgage community, it'll bring new jobs, right? So new, good, decent paying jobs. And for the people who are saying, well, it's the AMC's fault that, the appraisers are down. Okay, right now, let's say, so let's say that may be true. So I'm an appraiser too. So, okay, that may be true at some level. However, let's start with getting appraisers licensed first. Like, let's start with, is there a reasonable path? Because there's still a lot of lenders who manage the process in-house. I mean, we deal with all the lenders. There's still a lot of lenders, top lenders that manage the process in-house. So if it was just TMC's fault, you would still see trainees coming out of those shops that lenders don't have, which I don't see. And I know these people. I know these lenders that do that. When we talk to them all the time, I don't see that. And so it really is a common sense saying, if the regulations allowed a trainee to inspect the property without the supervisor, but across the board, state, investor, FHA, Fannie, Freddie, all of those, secondary market, if they allow that, that would at least be a step in the right direction, and a step towards a better future. Now, you can say, well, if the fees change or if that, okay, I understand all that. But this is something that's achievable right now. Like, this is in everyone's wheelhouse already. The fee issue, we'll worry about that after this is over, right? Or the AMC issue. Let's see this, and my hunch is once you see this happen, you'll see that, hey, you know what, the market and the checks and balances, the market and the I would say supply and demand in the market do